Happy Monday, everybody. I hope you had a great weekend. As we're about to dig into another week of action, it's been a pretty quiet business news weekend compared to how it's been in the past few weeks. So many people went into the weekend with a lot of fear with what breaking events were going to happen over the weekend. As I heard one guest on the business news say on Friday, bank crises do not like weekends. As you can imagine, I think she was referring to the fact that as the news cycle, even faster now, keeps going, the banks are closed. Settlements of funds don't happen. So when the doors open on Monday, what has happened? How do the books look? As the week gets started, the 17 branches of the famed Silicon Valley Bank will open their doors as First Citizens Bank branches today. This is huge. Fire sale on the assets, but the banks will open again. Looks like the shareholders and the overall American people will be the losers. Depositors in most cases were okay. Estimated cost of the Banking Deposit Insurance Fund, about $20 billion with a B. And that's just SVB. The run on the bank will make a difference. We'll see how it reverberates through the banking systems over the next few years. Election year, yes, we're already hearing calls for more regulation. Do we need it? You may recall I said last week that you cannot regulate greed and bad judgment, but we know that they'll try. As always, let's jump into the review of last week's market, preview this week, and these days almost anything is news, but Friday is the big news day. More on that in a bit. Last week started on Monday with stocks rallying into the Fed week. As we mentioned in last Monday's video, chances that the historic global banking hub of Switzerland would allow Credit Suisse to fail did not happen. There was a lot of action, but the final decision was UBS coming in to take over. This was generally well received, but there is still a lot of longer term news that will come in here. The ripple effect has yet to have been felt. For now, major global bank failure has been averted, and markets like that news. Overall, that was the talk of the tape. Add in a bit of dovish speak from ECB President Lagarde, and the markets took it all in stride. First Republic Bank is still in the crosshairs. Markets are not feeling much better about the global financial system in that regard, but at least it's looking like someone's at the helm. Not sure where they're steering, but we'll see how that goes. Overall, the S&P closed just off the morning highs, just under 1%, up just under 1%. The Dow was up about 1.25%, and the Nasdaq up about 1/3 Tuesday brought stocks gapping higher on the open. News that the officials were talking about finding ways to guarantee all the deposits, not just the insured banking deposits, including the punching bag. First Republic actually showed some life. 5% rally in KBE, the bank stock ETF. Canadian CPI, as strange as it is, we're still watching that, but it did come in a bit cooler. Sticking with the banks, Janet Yellen, Treasury Secretary, reiterated that the government's commitment to supporting the banking system. Now remember this comment, it's Tuesday. Overall, the Dow finished up about 1%, S&P up 1.3%, the Nasdaq up about 1.5%. Let's talk about the Fed day, Wednesday. For those of us who recall, this used to be when we watched the Green Sand Briefcase Indicator. If you're curious, just look it up. Stocks opened cautious and a bit into negative territory. They turned positive later in the morning, but not so much commitment in the numbers. As I mentioned in last Monday's video, the explosion occurred first when the statement was released. The FOMC removed some of the key hawkish language that was in line with the fear in the market. An end of rate hikes may be in sight, or so everyone thought. After the explosion, the boom heard the sound finally made it to us, and the boom sound was actually Janet Yellen testifying on Congress, contradicting what she said yesterday. Remember, I told you to remember that. Wednesday brought the push back from Yellen, not considering expansion of the insured deposits. What? Which is it? Well, the markets did not like that, and the sound waves made it to the markets. The selling came in with it. After a good start of the week, get ready for the numbers. Can you say algos? The Dow, S&P, and Nasdaq all down about 1.6% overall. If you watch any of the business news, they made it out to be much worse than it was, but we'll see how that goes. We'll get into this more in a minute, but this set things up for future inflation reports, not to mention the global banking. Thursday brought a gap higher at the open with some recovery from Wednesday's selling. Would it surprise you that Yellen delivered a supportive report on insuring deposits again? Powell continues to make it clear that the markets are betting wrong. They will not be rate cuts this year. And that's what the market's pricing in. So jobless claims fell again. Strong labor markets, we know how the Fed feels about that. Markets closed off their best levels. Banks stabilized when Yellen's with Yellen's latest. Dow was up 1/4%, S&P up 1/3%, and the Nasdaq up about 1%. A renewed interest in the mega cap growth. We'll see how that plays out. Article over the weekend pointing out that FANG may be dead, but now just Microsoft and Apple make up almost 13% of the S&P. That's the highest concentration of two stocks in the index since the 1970s, when IBM and AT&T were the big S&P names. Friday morning had a new name to worry about. Deutsche Bank was the latest in the crosshairs. This is nothing like any of the others we've seen in the past, but it did put the market on its heels. We did start to hear from the Fed heads. Bullard was first out of the blocks, supports liquidity of banks. but still fighting inflation. Sounds familiar? Nothing new here. There was some pile on from Moody's about contagion about banks, but that did not have legs. Bank stocks did bounce on the day, and that turned the markets and left a strong close to the week. After all of this with the banks, the regional bank ETF KRE had a positive week, and that's off a really bad year to date, to say the least. Overall, the markets finished up on the day and the week. The Dow was up almost 0.5% on the day and about 1.25% on the week. S&P up 0.5% on the day and about 1.5% on the week, and the Nasdaq up 1/3% on the day and a bit over 1.5% on the week. With all the bloodshed talk about on TV, you'd have thought otherwise. As we say, a lot of talk. Let's look into this coming week, the future news and the action. Starting with my favorite, we'll have the Fed heads out, but it's still a little slow. But we'll get Jefferson, Barr, Barkin, Waller, Williams, and Cook. Always some news. Micron and Lulu are coming out with earnings, and we'll have some housing data and even some inventories. But the big news waits until Friday. PCE, the inflation gauge favored by the Fed, and the University of Michigan Consumer Confidence and Inflation Expectations. This will be the icing on the weekly news cake. This will be big, but the next really big numbers will be out the first week of April, jobs, and then the May FOMC meeting. Until then, we'll watch and react to everything. So remember, this is a marathon, not a sprint. We go over this a lot. It's good to get a good idea of the day-to-day, but the Friday planning videos where we focus on your goals and how we go to meet those goals in the long term, that's where it's all about. These new news items will be important now, but it will not matter in 20 years when we go to send that baby to school or pay for the wedding or even take that retirement plunge. So please come back on Friday for more planning ideas. We're coming to the end of Q1. What did we accomplish? Let's keep in touch and see how things went. Stay in touch, and we'll see you later in the week. Have a great week.